By now, you've probably heard about Honey's billion-dollar coupon scam.
So what's the catch?
There is no catch.
Join Honey. Join Honey.
Join Honey.
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 Honey. Honey. Honey.
Honey. Honey. Honey. Honey. Honey.
Megalag's video exposed how the free discount service that is now owned by PayPal used tech trickery to steal millions in affiliate commissions from internet influencers. And the report, it set off a firestorm.
I think Honey should be sued for it.
Honey has now reportedly lost millions of users since
Honey is being called a scam.
Which isn't surprising because the people that Honey scammed were also the most influential people on the internet.
You have Honey installed?
What's honey?
Oh, no.
But also, they had audiences of millions who were also scammed. And now YouTube's favorite attorney is suiting up.
So on behalf of creators everywhere, I have filed a class action lawsuit to stop it.
You probably already know something about that story, but there's something about the Honey scam that almost everyone missed. Because the scam isn't only about users and influencers and discount code giving companies that bore the brunt of the dishonesty, but how a venture capital firm likely kicked off the whole thing. Not only that, but it's a story on how VC firms systematically use the influencer ecosystem to promote scammy products and build companies on hype alone, and then laugh all the way to the bank. It's a story about how billionaires have completely co-opted the influencer economy, and they've done it for pennies on the dollar. In the beginning, Honey probably started with the best of intentions. A small group of software developers had the legitimately good idea to automate discount codes from across the internet, doing your coupon cutting for you at just the click of a button. It was such a good idea that millions of people signed up for it in the first year, making it the largest site of its kind. Just like most internet ventures, there was no obvious business model behind giving discounts to users with no cut in between. Just like Facebook, Instagram, Uber, and like basically every tech venture idea in the last 20 or 30 years, the only way to actually make money was to run a bait and switch. Here's Cory Doctorow on the process that he calls enshittification.
Enshittification takes the metaphor of a disease. They all seem to decay in the same way. At first, they're quite good to their end users. Then they make things worse for their end users in order to make things better for their business customers. Then they make things worse for their business customers in order to return value to their shareholders. And then they turn into a pile of shit.
And the enshittification began in 2017 when Honey got a $26 million cash injection from a venture capital firm named Anthos Capital, which had very little internet presence other than a bit of a bad reputation for dirty dealings. The thing you need to know about venture capital is that their deals almost always are designed around exit strategies. A lot like fix and flippers in the housing market. They built a company up fast and then sold it for maximum profit without any consideration for the company's actual role in society. Venture capitalists typically aim to 10x their investment by making small bets on like dozens of companies and hoping that one blows up big time. Along the way, the VC firm hires new executive teams from business schools that aim only at maximizing the bottom line. They are the modern-day equivalents of the mergers and acquisitions robber barons who destroyed the American auto and manufacturing industries in the 80s and 90s, who would buy companies cheaply and then sell them for parts.
Greed, for lack of a better word, is good.
The key difference between the M&A guys and the VC guys of today is that VC sells and tears apart the future before it ever happens. In this case, by transforming a discount browser extension into a middleman who siphons away the value between the customers and the companies. From what I can tell, the main value that Anthos Capital offered was a vast war chest of cash in order to hire influencers.
Honey is the #1 shopping tool.
I love honey so much.
To increase the user base and drive up the market value of Honey before its eventual acquisition. The team at Honey disingenuously told influencers that they would sweeten the deal by offering affiliate commissions, which they ultimately later stole back when they recoded the software to divert affiliate funds to their own bank account.
Watch what happened to Linus's affiliate cookie after we clicked apply discounts. You see that? Honey came in, removed Linus's affiliate cookie, and replaced it with their own. claiming credit for the sale and pocketing the commission money for themselves.
In the end, Anthos Capital succeeded in selling Honey to PayPal in 2020 for an astounding $4 billion. That's off a $26 million investment. I don't know what their cut was, but it was huge. And after all, they had effectively taken over an enormous chunk of the entire affiliate marketing industry writ large. And it didn't stop there. While they promised that their discount codes would always offer the best possible price to consumers, they also worked behind the scenes with companies to promote only discount codes that the companies approved of, an additional scam that also burned the trust of hundreds of millions of people who installed Honey on their computers, expecting they would get the best price when they didn't get the best price. They got the price the companies wanted them to pay, not the ones that the companies offered on the internet writ large.
I mean, holy shit! Honey wasn't finding you the best deals possible, they were intentionally withholding them from you for their own financial gain.
That's the basic scam as far as the consumer is concerned. But I want to go back to the way that Anthos Capital and Honey actually packaged Honey for their eventual exit, because it's part of a pattern that I've been investigating across several VC players for years. I looked into some of the other things that Anthos has backed, and I want to note that this was not an easy task. There are no easily accessible databases that show where VC companies are putting their money. It's mostly a black box that occasionally shows up in press releases and like investor profiles that they put out in order to raise more investment for themselves. But anyway, one of the first companies that I came across that Anthos was involved in was one called Cambrian Biopharma, which an Anthos investor named Paul Farr is on the board of. This was really interesting to me because Cambrian is dead center in the speculative longevity medicine space. And a few months ago, I did a video about how the longevity scientist David Sinclair managed to sell his story about the life-extending chemical resveratrol to GlaxoSmithKline for close to $1 billion, and then exited with a windfall before it all turned out that, well, resveratrol didn't work.
They bought his company for almost $1 billion. So I have to know some people at Glaxo, all right? And the inside scoop was the scientists were all against it. Don't do this. Marketing guys won out.
The reason that sale ultimately went through was because the story of longevity is immensely profitable for anyone with a compelling way to tell it about how their system, their product, their supplement, their lifestyle brand can promise results. And this is the important part, even without demonstrating anything scientifically valuable at all. Cambria Biopharma looks like a reasonably legitimate clinical biopharma company from a distance. They have several drugs in development at various stages in the clinical pipeline, but I want to look at one particular video on the opening page of their website called Our Story.
Figuring out how to translate a longevity drug into human medicines has been a challenging problem, but Cambrian has invented new strategies to take a potential drug from mice and test it in people.
Do you recognize that voice by any chance? You've probably heard it before here.
Unbeknown to most people, the science of aging has made enormous progress in the last few years, with human trials about to begin in the near future.
That's Steven Tyler, the voice of the mega popular channel Kyrgyzstats, who, good for him, is also a voice actor available for hire on any number of projects. And here is where I want to sit. It's totally legal to hire a creator for anything, but it's also completely legal to lie about what you hope will be a bright new future of medicine. Here's an excerpt of an interview that I have coming out soon with the longevity scientist Matt Kaberlein.
You have to differentiate between the science of aging and sort of the marketing of longevity. And I think, unfortunately, over the past 5 to 10 years, these things have become blended in ways that are not completely healthy. I think there's...
You see, Steven Taylor's voice carries the immense credibility of the Kyrgyzstats brand and automatically invokes that trust that it has been built up over hundreds of extremely popular and frankly great videos. But I have to ask you, why would a clinical trial company need to borrow that credibility at all? Well, it's because Cambria Biopharma is raising money through venture capital to either eventually exit with an IPO or a sale to a pharmaceutical company like Pfizer or GlaxoSmithKline. And you can find videos on YouTube of Cambria CEO James Payer trying to drum up more investment for his company.
And most of the breakthroughs in this space have to transcend the biotech valley of death, which is the tough transition from curing a disease in a mouse and figure out how to turn it into a drug that's going to be safe to put into humans, is ready to go in, is manufacturable, and then start clinical work.
Look, I can't tell you if anything in this company's pipeline will change the nature of disease and cure the frailty of aging. But I can say that the longevity space is incredibly frothy, and everything you see online about it is ultimately focused on raising ever more funds for the company and that eventual exit that all of the investors will take. To date, Cambria Biopharm has raised at least $174 million, which undoubtedly makes Anthos Capital, the company that backed Honey, very happy. And this isn't an isolated thing at all. Anthos also raised $17 million for Switch Bioworks, a company that was spun off from a Stanford University research grant who wants to create living bacterial product that revolutionizes the fertilizer industry to make it less dependent on fossil fuels, which again, it's an amazing pitch. I'd love to see this come to fruition. But when you look at the board and advisors, it's really just a bunch of business guys and green tech folks. They're not experts in ag or, other than the founder, even in biotech. Which means to me that the shareholders believe that the pitch is more important than the science. It's another company ripe for enshittification. Anthos also worked with a company called Carbon Robotics that works with farms to burn weeds with AI and lasers, whose promotional materials have a glossy country rock soundtrack.
Introducing Laser Weeder by Carbon Robotics, equipped with high-performance NVIDIA GPUs for artificial intelligence.
And look, the Laser Weeder looks awesome, but I gotta wonder, why does it have sponsored spots on like GeekWire and a PR campaign that lands it promotion on CNN? They want to do more than just sell farm equipment here, right? All of these pitches, they sound great. I want to live in a world where aging stops in its tracks, where we reduce pesticide use with lasers, where fertilizers exit from the petroleum industry and coupon codes really give you the best possible deal. But how much can we trust any pitch when the entire funding path is based on exponential founder gains on their exit from the company that they promised to build? How do we know if a great pitch is just that, a compelling package? Why do we continue to believe that doing good in the world will also be immensely profitable? And then there's the influencers in this. They've gained our trust over the course of their careers, doing video after video, and they're trying to make a buck, but have they done their due diligence along the way? I want to give you an example. Just this last week, I decided to drop a VC-backed sponsor for one of those data removal companies that you've no doubt heard of, because after testing it out for 2 months, they failed to remove my data from the internet. Kicking them to the curb cost me about $2,000, which is not a decision that most people have the, ability to make. Most influencers would take the check and make a point of not looking too deeply into their sponsor's background because the money, they got to monetize somehow. Which is why you should consider supporting this channel by signing up for a premium membership on Substack. I've only taken one sponsor for this channel to date, and it's a company called Crowd Health, which offers an alternative to private health insurance at a fraction of the price. And I openly acknowledge that it's risky. I only endorse them because, for me at least, I think it's a risk that is worth taking, and I took it before I ever started working with them. I did a whole video about that particular moral dilemma that I was facing here. And if it does turn out that I'm wrong and it is in fact a scam, I will let you know, just like I updated my takes on Wim Hof and Andrew Huberman. But I digress. Let's go back to Honey. Since it was acquired by PayPal for $4 billion in 2020, making it one of the most profitable VC exits of all time, Honey hasn't issued many public statements online at all. Its last post on its blog was in 2022, but I wanted to see what they thought about Megalag's investigation, so I sent them an email. Their PR teams responded to me almost instantly with prepared statements in their online chat tool and through email, which suggests that all hands are on deck right now. Honey Hive, it's buzzing with activity. Here's what they wrote. Honey is free to use and provides millions of shoppers with additional savings on their purchases whenever possible. Honey helps merchants reduce the cart abandonment and comparison shopping while increasing sales conversion. Honey follows industry rules and practices, including last-click attribution, which is widely used across major brands. The only thing interesting in their statement is that they were basically admitting what Megalag had found. Last-click attribution in this case means that so long as someone clicks on their pop-ups, Honey considers it permission to take the commissions for themselves. They also say that this is something that's widely used across major brands, which makes me think that this isn't just Honey's business model. It's probably the same model used in Rakuten Cashback, Camelizer, Coupon Cabin, and Capital One, which is currently installed on my computer. I should probably take care of that. Anyway, the takeaway for consumers here is that if you are using a coupon code extension, it's still probably worth your while to Google around for your own discounts instead of just trusting some automatic service to do the work for you. That's not a great message, but that's just what it is. There is an old saying on the internet that when you don't pay for something, you're not the customer, you're the product. In other words, if something sounds too good to be true, it probably is. And the thing that terrifies me most about the Honey scam is not that it is an exceptional aberration in a functioning market, but how it's the norm. The entire creator economy is built on scam architecture. We live in an economy that was entirely conceived of by the descendants of Wall Street raiders, whose goal was to create businesses that they can exit from with a huge payoff without doing the actual work. They only focused on the sale. When exiting is the goal, the company doesn't have incentives to sustain any of the good ideas that they started out with. We are a country and an economy of pitching. The venture capital world cannibalizes all generally good ideas for a common monetary denominator. There's very little worth actually trusting on the internet at all, especially when at one point or another, someone asks you to open up your pocketbook. Whether it's our private health insurance nightmare, newspapers, taxi services, real estate companies, or even just interpersonal friendships along the lines of Facebook, Instagram, and LinkedIn, all of it is an internet commodity up for sale. Yes, every discount code you try is really just a plan to separate you from your money. And the biggest scam of all are the people orchestrating it, the venture capitalists who kill every good idea so that a few people can walk away with immense profits and leave us with the shattered pieces of broken dreams. Thanks so much for watching my tiny addition to Megalag's video. If you haven't seen it yet, there's a link down in the description. But before I go, I want to ask you two things. Please consider supporting my work on Substack because it's an awesome community and keeps this channel honest. I'd also like to let you know that I have a back channel, which used to be called Scott Carney's Back Channel, but I thought maybe just Back Channel would be a little cooler. I made it because I wanted to have a place where I could do like opinionated videos and in the moment reactions to news events where I don't have the time to do the actual like full-on investigative research, or just to tell you personal stories that might not be everyone's cup of tea. I didn't want to distract from the main channel where you're watching this. And funnily enough, like I'm doing more videos there than I am here, but I only have 2,500 followers. So I would love you to come over and check it out. The comment section can get feisty, which, some people find fun. Sometimes I find it fun, but not always. Anyway, that's all I have to tell you today. Beware venture capital, beware the lure of the pitch. From Pokebear LLC in Denver, Colorado, this was Scott Carney Investigates. Thank you so much to all of my supporters on Patreon and on Substack who make this work possible. If you want early access and to get your name on the honor roll, please check out those links down below. And, it just means the world to me that you're here. From Pokebear LLC in Denver, Colorado, this was Scott Carney Investigates.